seeing gold, like you say, especially coming off, 150 bucks, consolidating at or around 2000 is very healthy and very good for the overall market, especially as you're talking about, pushing through and looking forward into 2024 and what's going to happen then. And then you mentioned the banks and all their targets.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue our coverage in the gold and silver world as we're now rounding out 2023. Amazingly enough, a year has gone by quickly, lots of ups and downs in both the gold and silver pricing. And fortunately, for what may be his last appearance on the show of 2023, is Steve Cope of Silver Viper Minerals joining me to dig into some of the things that have happened and offer some thoughts on what to look forward to in 2024. So, Steve, great to have you here with me today, as always. And how are you doing there, my friend?
Doing well, Chris. I thought after our last interview, this was going to be us flying high. I was looking at what gold and silver were doing, a week and a half ago. I was getting really excited. This is what we were talking about. This is what we said was coming. And I thought, finally we were going to do a follow-up video and be like, see, we were right. And we were. It was a much shorter bump up and that initial bump up than we were hoping.
Well, I suppose some of these things are a matter of perspective. And here we have our gold chart. We're recording Tuesday afternoon on December 12th. Obviously, yeah, a week and a half ago, we had that spike on the Sunday night open, brought us over the $2150 level. Although, I guess another way of looking at it is that to have a $150 sell off and still be sitting around the $2,000 level, just a couple dollars off, is a positive in its own right. Before we hit the record button, you were talking about how a lot of the producers are doing pretty well with a $2,000 gold mark. And so I suppose it depends on how you look at it, yet we're seeing bigger swings. We saw 150 up, 150 down. And in the midst of what's happening, where, I mean, we're not in an environment, another thing you mentioned before we hit record, where 5, 10 years ago, a lot of the banks were calling for substantially lower gold prices, coming out almost universally that for the reports that we've seen so far for 2024, in the midst of everything that's happening, still calling for a higher gold price in the 2000s. I'm seeing 2100, 2200, 2400. And anyway, with all that said, curious how you look back on what we've seen throughout 2023 and any thoughts on anything I just mentioned there and heading into 2024.
No, I mean you're right, especially on gold. It's always the weird thing, and we were talking about before we were started recording as well about sentiment of investors and people that are looking at the space and seeing gold, like you say, especially coming off, 150 bucks, consolidating at or around 2000 is very healthy and very good for the overall market, especially as you're talking about, pushing through and looking forward into 2024 and what's going to happen then. And then you mentioned the banks and all their targets. One of the interesting things was almost across the board, all the banks shorted gold right after that night when it spiked up. So it was, they've got these great targets, but they still don't like big swings and jump on the bandwagon to push it back down into a range fairly quickly. But no, the gold producers are doing very well at 2000 gold. That's kind of one of the things that we've always talked about. And we've mentioned in talking on the silver side, you know, the silver prices, the primary silver producers are hurting, and why most of the primary silver producers have become gold producers, because it's been a healthier market here, in this bear market. And but they make money. They were making money at 19. They're making money at 2000. These are healthy numbers that most of the gold producers are creating a lot of positive profits. Now, we mentioned and talked about market sentiment, and that's kind of one of the strange things about this equity market for the last 2 years is you've got, companies like Agnico Eagle, more than 50% off their all-time high, and yet you're trading around record gold prices and their revenues and their profits are very high. And so you wonder, we talk about, okay, we should be excited, gold's at 2000, but most of people's portfolios aren't in the physical metal. They're invested in the juniors, the producers, the ETFs, all these paper markets, and those have been hit hard over the last 2 years and haven't performed like they should relative to what the metals prices have done. So you get this weird 2 year period where metals have done, they've held their own. They've either, started the year and ended the year at the same price. This year they're going, they're up higher than where they started. So that, it should be a market that people are getting more and more positive about. And we have some positive sentiment finally coming back, but it's been something that's just been beat down. And it's because people look at those paper investments in the equities and they've been kicked. The junior space, we're down, 80-90% off our highs in a lot of cases. So it's this tough equity market, and that just speaks more to the overall economy and different things that are going on and where people are struggling and why they've needed to sell their paper assets. But that's where it's been frustrating, and it's that divide between the physical price and the price of the equities that just eats people up inside.
Well, do you think we see a bit of a change in that, especially let's say that for the rest of December we get somewhere around a $2,000 gold price, which would, I believe, leave us a higher average price over the quarter than what we saw in the third quarter? Do you think it'll be a matter of some of the producers will start having some good earnings, which will be perhaps the turning point of bringing money back into the sector? Or what do you think it takes to see that turnaround?
Yeah, I mean, the biggest part of it is we need the generalist funds to get really excited and come back into the space. I think it's the precious metals funds still don't have the inflows. I've heard from some they're starting to kind of balance the inflows to the outflows, but so they're not having to sell different companies to invest. They could kind of just sit there and tread water and not really do much. But and they're cautiously optimistic that it's going to get better here over the next, the short term. But the big thing is we need those big generalist funds that don't really know anything about precious metals investing and rely on those precious metals funds, and will pour their money into them. The really high net worth individuals starting to pour their money into some of those funds to place their bets for them. And that, because it's those funds that really write the bigger tickets that finance the junior space, that will then go out and find, the materials, and then the producers will buy them. We haven't had, those earnings help, but the producers have been very cautious about their strategic investments in the juniors, and a lot of them just haven't done it because they've seen the economy, they've seen different things happen in the world, and they've been a lot tighter with their cash so far. But there's always that pressure on them of their reserves and resources depleting, and their investors saying, you've got to grow your production profile, you've got to replace, the existing production, and go find the next mines that are going to, make us more money, especially as we come into, potentially a market where metals prices are going to run. They want those mines online and taking advantage of those prices. So there's always that pressure on those guys, and at some point you're going to see, and I think it's going to be very soon, you're going to see them go on an M&A splurge where they start buying, those existing development assets that are out there, or single kind of, asset producers, to start, increasing their own reserves and resources and mining, production profile. But they also will need to start redeploying a lot of that capital far more aggressively into the junior space. When you meet with a lot of these miners, they, oh, we love what you're doing, but we have no budget to right now to invest in the juniors, or very, very little.
Right.
And they say, oh, we really feel for you. This is really tough. It's like, well, you guys, there's only two avenues where the juniors typically get finance, and it's through the producers, or it's through, the funds. The retail and high net worths can take you so far, and they've been really carrying the day on the financings that have been done this last year for most of the juniors. But we need that big influx of capital to come into the space, and it always does. It's cyclical, but it's been too long of a downturn this turn, a tough downturn in the market, and it's time that some of that capital starts coming back in. And really, I mean, you look at the share prices that are out there right now, and it's, easy pickings. Like, even the bad companies are going to perform very well as soon as these metals prices really start to run. So if you've got capital out there and you are, contrarian or semi-contrarian in nature, this is the sector on the equity side that you should be looking at, because you're going to make a fortune. It's just, you've got to be patient and got to be willing to just, deploy that capital.
Yeah, that certainly is the case. And perhaps, at least in terms of one indication of a little bit of a shift, we see that the investor inflows were into GLD, net inflows of more than $1 billion in November, which reversed what we had seen. Here we take a look at GLD, and you can see some inflows in the blue lines in November after a lot of outflows earlier through the year, and certainly would be nice to see. And perhaps that's the first sign of seeing some more stability in the gold price before we get movement back into the miners. Interesting note here on the silver side. This was from the Silver Institute with their update for the mid-year. And again, just looking at the mine production, we had a peak back in 2016, 900 million ounces, and this has gone steadily down. When the COVID shutdowns, we were down to 783. But um, interesting, as you point out, that there's in some cases a lack of investment, some cases harder to find projects on the silver side, and again, we're also running a deficit, and at the prices that we have right now, as you've mentioned quite a few times on the show, not bringing a lot of new investment in. And just any thoughts on that decline we've seen? It's been going on longer than you and I have been talking about it, but now we have some factors that perhaps could even exacerbate that going forward. And any thoughts on that drop in the silver mine production that we've seen over the past half decade or so?
Well, there's a number of factors to that, and the main one is it's harder and harder to find silver assets, just the way they form. A lot of the near surface or at surface assets have been found. So what do you have out there for new production while the existing mines are running through their reserves? There's not a lot of choices. There's not a lot of options. And then because as we're talking about silver here, we're here silver again at we got up to 25. We're pulled back now to the high 20 or high 22 range, 23. Silver miners don't make money at those prices. Primary silver mines don't make money. You need $30 plus silver for most of the primary silver mines to make a go of it. So, I mean, there are some very rare exceptions to that, but as in general, that's what the silver producers have needed before all this inflation. They certainly need at least mid-20s before the inflation, so we'll say for sure 30 now. So where most of that production comes as a byproduct basis from either gold mines as a byproduct or the big copper, lead, zinc, porphyry style deposits and those, and then you start putting the political pressure on the jurisdictions where the biggest porphyries are, and you're not going to get a lot of new production coming out of them. And there's no, because of the silver price and the amount of silver relative to other metals in those deposits, there's no incentive for those miners to ramp up production and just chase the silver or anything along those lines. I mean, you would have to, I don't know what the number would be for silver to really put the pressure on them to do that, but you're talking 100, 200, $300 silver before they would start isolating and targeting silver to try and increase the growth of it as far as how much they're producing. So that number is going to keep coming down, and then the demand number is going to keep going up regardless of here they're showing it kind of treading water slightly down from last year, but we still have this early stage push of where we're at in this green movement, and we know how much silver is needed on the solar side and on the infrastructure side and in the electric cars and all these electrical components, and it's not out there. And and even as it sits right now, the demand is exceeding supply. We're ripping through the deficits, or the holdings at these various banks and the deposits that are it's disappearing. And on top of that, I think when the Silver Institute report came out on the demand side, they had India way off, and then India, right after they came out with the report, bought a massive amount of silver, which will also skew these numbers and make it even more out of whack as far as what the demand was versus the supply.
Yeah, I'm interested to see how those India numbers affect things because, like you mentioned, it came out right after this was published and had been basically flat on the year. Then you get that 60 million ounces. I wonder how much the deviation we'll see to that, and certainly makes the November and December figures something to keep an eye on. But yeah, you laid it out in terms of talking about how we have the industrial demand. The solar numbers continue to be quite massive, quite a range of figures that we're seeing there. And in terms of where is all this silver coming from, I found it interesting that in a Bank of America report, they mentioned something that we've talked about quite a bit here. Silver prices have been supported by fundamentals. Granted, silver is often traded over the counter, reducing visibility, but it's worth noting that above ground stocks, especially at storage sites linked to Chicago Mercantile Exchange and the LBMA, have fallen steadily. And I don't know if 2024 will be the year where that becomes a wider spread concern, but again, I just think it's interesting that the banks are talking about a lot of the same things that you and I have been seeing, whether on the silver side, the gold side, and again, at the same time all of this is happening, now we're getting a pretty widespread consensus that the Fed will be cutting next year. Again, by the time this is broadcast, this will be just moments before the Fed's latest meeting. And curious, any thoughts you have on what we'll be seeing out of the Fed going into that one?
No, I mean, again, I don't think there'll be too much exciting on this one. We'll probably get the token. We're still pausing rates. We're good, but we've got to hedge that with we're going to keep an eye on the economy and the jobs and everything else, and we may or may not raise rates, but right now, and then we'll see the minutes, and it'll be obvious that no one wants to raise. They probably are starting to talk about dropping, but they won't admit it on their announcement when he speaks. So it's always the usual jargon back and forth, covering their butts. They can't. I mean, they can, I guess, but they're not going to raise rates anymore unless something very dramatic happens in this world that changes on some sort of black swan event that no one's anticipating that would somehow warrant them raising rates. Inflation goes through the roof overnight and they admit and accept that inflation is way higher. I don't know, but to me, you're right. I mean, the expectation is that there's going to be rate drops or rate cuts next year. I don't think it'll be early in the year. I do think it'll wait till the latter half of the year before they really start. But if there's enough pressure on them, they, maybe with the election too, they may want to try and hype up the economy a bit. There may be pressure on them to do the rate cuts earlier and make the stock market look stronger, make everyone else feel better about themselves going into an election. Because right now, the way the economy is sitting, both in Canada and the U.S., I mean, we're looking, Trudeau and the Liberals here are heavy underdogs leading into their next election, and thank God for that for the time being. Let's hope that stays that way. In the U.S., I mean, again, I think right now the Republicans are, from what I saw, Trump's leading in Georgia and Michigan, and they're not even sure if he's going to lead his party because he won't even show up for a debate, so because he doesn't need to. But outside of something crazy in the US happening, I think where Trump doesn't become the Republican nominee and then decides to run as an independent and somehow skewers the whole Republican side, I think you're going to see a switch on that front too. And but the Democrats, if they're going to even try and push on it, they've got to make the economy and make people feel a lot better about the costs in grocery stores, the cost at the pump. Like, I was shocked going. It's the first time in my life when I was just down in the US this last month, and you go to a grocery store, and I've been complaining about how bad things are in Canada, and you were basically looking at the same products and putting US dollars in front of the Canadian dollar sign, and that's never been the case. It's always been way cheaper for fuel for groceries in the US, and it was shocking trying to buy or look at different things in the US and what the costs were.
Yeah, I certainly have noticed that in my time since coming back from Mexico, and there's a little bit of a sticker shock there. And actually, you mentioned something that certainly I agree will be a factor. We have the election coming up, and in terms of rate hikes, even Joe Biden is saying that economy's in a sweet spot, so he's not a fan of any additional rate hikes. Not entirely surprising, as he's trying to get reelected. Does make you wonder, though, what sort of financial and monetary stimulus we will see, especially with next year being an election year. And although, like you point out, basically 0% chance of a hike or cut at this meeting on Wednesday. And I also agree that perhaps March seems a bit early for a rate cut. unless you have some sort of overt breakage of things, because we had the CPI inflation numbers come out on Tuesday, came in line with the headline number at a 3.1% annual rate and the core CPI at 4%. So obviously the headline being helped by lower energy prices that have come in over the past couple of months. So um,
Which
still,
is the one risk. That's the one, you know, it's not very often now anymore. The Saudis don't like seeing barrels of oil costing, you know, in the like high 60s or 70. They want $100+ so they'll let this happen or let keep oil prices down, but then we're going to get an inflated inflation number at some point as that moves back up, to its higher numbers where they want a barrel of oil selling for. So that's the one that always scares me on inflation is look, we're getting inflation under control when it's based off of fuel prices, because those are going to go back up. Hopefully not at the pump, because that, even in spite of oil falling off, seems to still be record high numbers everywhere. But it would be that's the one that scares me on inflation, because that's the one they can manipulate very well as they release, US reserves and trying to, do certain things to keep those fuel prices under control. But they don't want to keep that barrel of oil under, like, they want $100 plus, the people that control that number normally.
yeah, and you could certainly imagine seeing a higher oil price in our near future with everything that is going on out there. And obviously, that factored into some of the price declines that we're seeing. So, um, will be an interesting 2024. Again, a lot of things in place. We have central banks continuing to buy gold, the dynamics out of the Fed, and I can understand why a lot of these central banks are calling for higher gold price. JP Morgan even calling for a higher silver price, average price above 30 in the fourth quarter, and does seem like it's set up to be a year where more money is created. And obviously, we'll see how that all shakes out going forward. Any other predictions for 2024 or things that you were watching out for or think will affect the metal, Steve?
No, I think you're hitting on it. It's the same fundamentals that we've talked about forever. It's just, it's a question of when do the powers that be step out of the way and decide they're going to make a bunch of money on the way up. And the banks are all forecasting for it to go up. So you would think that they're preparing themselves, and shifting their focus to allow it to run up and make money on it for once. So I mean, I do think 2024 is going to be a great year for both gold and silver prices, especially silver. Um, if JP Morgan, I mean, it probably outperforms the JP Morgan number, but if they're even remotely close and silver, even by Q4 is trading over $30 on average, that would be a long overdue for the silver producers to finally at least break even on their deposits. So let's hope that it keeps moving up. If that's the low end of the spectrum, that's great. Let's hope we have a big year. We don't need the dramatic swings. We don't need the, like, 150 $200 gold swings in, a day or, multiple days. Just keep consolidating. 2000's a great number right now. Consolidate, build strength, and then just steady jumps up to give people confidence. It's those wild swings that scare the banks, and then they end up, doing what just happened. And they, even though they think next year is going to be great for gold and silver, they will jump in and short something overnight if it goes too fast on that space. So just steady, calm, slowly, move up, and we'll all be very happy.
Well, that would be nice. I wonder if we won't get more of the extreme volatility like we've seen, unfortunately, but um, I think we're going to start to see bigger moves in both of the metals really as the months go forward here and just see some increased volatility. So, although I'll be rooting for your outlook on seeing things a little bit smoother, which would be helpful, but in either case, Steve, also perhaps you could give us an update at how things are coming along with Silver Viper. I know that you've been excited to get out there and continue some drilling and also have recently announced a financing. So perhaps you could walk us through the latest that's going on there.
Yeah, so it's the first time we're doing a life placement, which is a new style this last year, that Canada is going to let you do, that allows for the shares to be free trading on your placement as soon as it closes, which is attractive to a lot of investors. And in this market, we're still offering a warrant with that, so I think it's a pretty attractive placement. We're going to raise. That's the max that we can raise there that you're seeing on the screen, and the number is actually 4.25. We issued a announcement after that just adjusted down because we can't issue more than 50% of the shares outstanding the way they calculate it. So anyways, the max is 4.25 million. If we can, do over 3 on that, you're going to see a drill program very early into next year. But yeah, feel free to reach out to the company. We still have room in that placement, and interested both. We've done the paperwork that's necessary to allow Americans as well to participate on this life placement. And it's very simple. It's actually less paperwork. On this style of placement, you don't have to be an accredited investor either, because we're doing some extra steps involved, which is another part that makes it appealing to some of those retail guys that have never been able to do private placements with the hold paper, because they have to acknowledge that they're an accredited investor. This one you don't have to be, and there's basically you email it, we'll let you know. There's a link on the website that you'll be allowed to access as a Canadian. As an American, you'll have to go through a separate process, but just reach out to the company, and our corporate secretary can help guide you through what you need to do. But it's pretty exciting and interesting how this style of placement adapts and moves forward in our space. I think it's helpful to the companies. There probably needs to be some tweaks to the rules and everything else, but it's an interesting something from the exchange that it really should help some of these companies raise capital a little bit more than the traditional private placement way of doing things.
That makes sense. And anything you could touch on in terms of the timing? I've gotten a few questions about the timing of that. And obviously, you mentioned that you're getting ready to begin drilling again, but anything you could touch on there?
So yeah, we have 45 days to close the placement. We announced an initial date of the 20th when we for our first tranche closing. That's a fluid number. We have to get to the minimum of the placement of 2 million before we could close a first tranche. So we're just working through that. We're moving that direction. So we may make it by the 20th, but we'll see. Hopefully metals prices cooperate. It makes it a lot easier when metals prices are going up in the middle of a placement. But it's like I said, I mean, whether it's us or anyone else, it's a very attractive time if you've got capital to deploy to put into various mining companies, because all of these companies should do very well as silver prices do up, regardless of whether they have success drilling or not. And in our case, we have a lot of drill targets, and the ones that we're going to start on at El Ruby and El Molino, we're very high and very confident they're going to produce some very good results. So I think it's a great time if you got capital to deploy to reach out. We're more than happy to bring in some new investors into the company, and excited for people to come along on the Silver River story with us.
Well, appreciate that, Steve. And perhaps before we wrap up, can you just let folks know once again the best way to get in touch if they have questions about the project or the financing or anything else you guys are doing?
Yeah, all the information's on the website at www.silverviperminerals.com. You can reach management through info@silverviperminerals.com. Please feel free to reach out, or you can call us through the phone number that's also on the website, and can reach out and use my direct link to my phone. Please don't hesitate to reach out or to wait. And if you don't want to invest, that's fine. I just want to wish everyone a Merry Christmas and enjoy the holiday seasons, and we're excited to see what's going to come in 2024.
Well, should be a fun year to watch, and certainly the culmination of a lot of things that have been building in the markets for quite a while. So, Steve, I'm wishing you and your family and everyone at Silver Viper a happy holiday. And it's been fun covering everything we've watched throughout the year and making sense out of the latest histrionics from the Fed. And we'll look forward to seeing what 2024 holds, although at least shaping up to be a positive one for the metals. And in fact, 2023, we do see gold up, silver, maybe a late year rally could get back in positive territory on the year. So either case, thanks as always for joining me, and we will look forward to catching up with you again soon.
That's good. Take care, Chris.